Let's stick with the earnings. Tesla to report today after the closing bell. Bloomberg's Trudell joins us now for more. Craig, welcome to the program, sir. What a 24 hours for the likes of General Motors. Do you think Tesla can repeat the act?
Yeah, I mean, it's going to be a tough ask because on one hand, this is a company that is coming off a really solid quarter of EV sales. They're the most that they've had in a quarter ever. And yet the sort of go forward outlook, I think, is going to be the real rub. And, we've heard that, from Elon Musk himself 3 months ago when he talked about this notion that once we see EV tax credits go away in the U.S., that Tesla could be in for, in his words, a few rough quarters. And I think that's, sort of something that's reinforced by what we heard from GM yesterday and in the lead up to their earnings, that this is a case of just a sort of widely held view that EV uptake is going to slow pretty dramatically in the U.S. without these incentives. And that leaves, companies like Tesla that only have that to offer in a bind for quarters to come.
Craig, do you think there's the potential for more positive framing of the same story with this in mind? GM are pulling back. Others are pulling back. They're more of a purer play on that story. Doesn't that give them the space to succeed, space they otherwise wouldn't have had?
I think you can try that. I guess the concern is that, yeah, maybe you have more of the pie, and yet that pie is going to shrink so much in the U.S. at least, and it's already the case that, to Tesla's credit, that they are so dominant in this segment of the market. So even as we're seeing, the likes of GM and Ford saying, look, we expect this to really shrink, it's not as though they're completely doing away with their electric vehicle models that they have on offer. They're just sort of counting on demand for those models, dropping along with demand for, the Teslas that are on the market. And so, I would not be surprised if we heard some of that spin. And I would sort of also anticipate that Musk will lean into, sort of brighter, shinier objects like humanoid robots and driverless cars. But those are products also that Tesla has yet to really commercialize in any fashion.
Watch this space. Craig, thank you, sir. Craig Trudell of Bloomberg out of London. Let's stick with Tesla. George Gianarikas of Canaccord Genuity remaining bullish, writing, with momentum in near-term estimates, potential for new EVs, a continued expansion of the robotaxi, and the possibility of transformative developments in humanoid robotics, we reiterate our buy. George joins us now for more. George, welcome to the show. It's good to see you again. So let's talk about the quarter behind us. We're looking for that boom juiced by the expiry of tax credits. We had a lot of people come on the programme talking about how they'd been buying an EV before the interview even started, George. So I imagine we're going to see a lot of that. George, the question for you is, what does the rest of the year look like? What does early 26 look like? And how rough could this be?
I think you guys sort of nailed it in your previous discussion. In the near term, and maybe even the medium term, the issue is, can they continue the momentum? If you recall, the first 2 quarters of the year were pretty bad for Tesla, and there was a rush in Q3 to buy EVs in the US, but it wasn't only the US. I mean, they released some new vehicles in China that did incredibly well. So the question for people is, will we see a sequential decline in Q4, and it's normally an up sequential quarter, and what happens in 2026? The real question here is, what does the bridge look like? In other words, when can robotaxi, when can humanoid robots kick in such that they can continue the momentum in earnings for years to come?
What would you hear, George, that would make you think that maybe Tesla has to be valued as a car company and not necessarily as a company tied to self-driving and a host of other technologies?
That's a great question, and that's been a question for, 15 years. Tesla should be valued like a car company, therefore its earning multiple should be really low, and we should look at comps like Toyota and GM. But I was a tech analyst for over 15 years before I started covering Tesla, and really this reminds me of companies like Alphabet, like Amazon, like Netflix, and that was the same debate. Shouldn't they be valued like advertising companies or media companies? And when you have companies that singularly disrupt end markets like Tesla does, it's really hard to apply the same valuation metrics to new companies. And so it's a debate that will continue going forward, but we look at Tesla as driving new innovations, driving new markets, and they're actually, what they've done in the last 15, 20 years is they created new markets. I mean, they've created essentially the EV market. They helped create the energy storage market. They're helping to create the robo-taxi market, and they're helping to create the humanoid robotics market. So it's a different paradigm that in a lens through which you have to look at Tesla.
I want to look at two aspects of that. On one hand, you've got the full self-driving, and on the other hand, you have the idea of humanoid robots. With the full self-driving vehicles, I'm just wondering how much Elon Musk was set back based on the frayed relationship that he has with President Trump. There was this theory that he would be in the front seat, not only technologically, but also in being able to roll out the robo-taxi programs because of a sort of positive spin coming from the White House. Can you still lean on that? Is that still such a push that will help them get this through?
Those relationships are way above my pay grade, but I think it is essential for the United States to push forward on autonomy, AI, and the list of things that we need to do to compete more effectively against China. So in the medium to long term, despite the volatility in those relationships, I expect that the administration will push forward and help ease the path for us to be a leader in those markets and compete more effectively against China. So look, Tesla is one of the leaders in autonomy, and I continue to expect this deployment to accelerate over time.
George, do you expect they'll get squeezed out of a place like China? How difficult is it to compete there? It's a conversation we had with the GM CFO just yesterday. We've often called it the most competitive industry anywhere on the planet. It's got to be the Chinese EV market right now, George. Can they stick with it?
That's another really great question. I mean, Chinese EVs are remarkable, and they're the global leader in the space. And what Tesla has done really effectively is they've produced vehicles at a very low cost relative. They've done that on their own without really, over time, government support. And they have a feature set that's incredibly effective, and they've shown they're able to compete in China against these incredible companies in that country. So I continue to expect that they'll trade well in China, and that regardless of what happens politically, that to the extent they have a place to compete there, they'll retain market share. And they've shown that time and time again. People have counted them out in China numerous times, and they've just introduced new models with new feature sets that have effectively allowed them to maintain this share that they have for several years.